Hey everybody, it's February 15th. The big news is there's no snow in the last couple days in Omaha, Nebraska. That's got to be exciting. All right, we're going to talk about a topic that may not be everybody's favorite topic right now, but it's something that has to be addressed in the Omaha real estate market right now. It's called pre-foreclosure short sales. And I'm sitting here with Tom Friehe. He's a realtor with Zoom Marketing Associates. He's a specialist in short sales, and we're going to talk about what's going on, what the resources are to help people, and kind of get Tom's opinion of what's coming to the market in the future here. Thanks for joining me, Tom.
Thanks for having me, Terry.
Cool. Tom, tell me what a short sale is.
Well, a short sale is basically a property that's in some financial distress that has not been foreclosed on by the bank. So the owner still has an opportunity to sell that property themselves.
Perfect. And as you work through a short sale, you need the lender's participation, right?
Absolutely. Short sales are subject to approval by the lender. The owner of the property is listing the property, but in most cases will take no money out of that property.
Yeah. The key thing that I want to stress here is houses are underwater. The homeowner, financial hardship, divorce, multiple reasons that this can happen, and there is no equity in the property. There's actually the homeowner, seller of the property, is going to have to bring proceeds to clear the sale unless they do a short sale. And let's talk about kind of some steps where when you meet a homeowner, kind of how you start the process.
Absolutely. When I meet a homeowner, first thing we need to understand is their financial situation, how much they owe on the house, how many assets they have outside of the mortgage. Are they currently making payments on the house? Are they currently living in the house? Important things.
Yeah, exactly. You need to get an understanding of what's owed, what potential liens are out there, tax liens, other liens of any type that may impair the ability to sell the house. So you got to get a clear picture of what's going on, and then to do a short sale, those homeowners typically need to be distressed. They just can't afford it, right?
Absolutely. The homeowner needs to have some distress. We typically see people who have had an unexpected expense in their life, medical bills, divorce, loss of job is a big one we see in today's market. Without that distress, the bank's not going to work with the homeowner to take a short sale.
Yeah.
So if you're going to the bank and you've just decided your house is worth less than you thought it was and you don't want to make the payments anymore, they're probably not going to work with you.
Right. Yep. And what happens when a homeowner tries to do that and the homeowner still has good income or assets? There may be a judgment deficiency. So that's why a homeowner has to be distressed typically to make this work. There are some circumstances where lenders are more cooperative nowadays, but in most cases the homeowner just cannot afford the house. Tom, let's talk about the next question. What's the emotional state of people when you start talking to them?
Most people I talk to have been in some distress for about 90 days already. They've been making payments, they've been paying their other debt, but it's a struggle at this point. They see it coming. Many of them have already called the bank, and the bank asks them if they're late on their payments, and they say no, but they're having trouble and they want to talk to them about it. And the bank says, "Why are you calling us? You're not late yet." So many of these people have sleepless nights, have stress for a long period of time before they get to this point. They don't know where to turn.
Right. Yeah. There used to be. We feel there's a change in the consumer. There's a lot of people hurting, the economic conditions right now, and there used to be a stigma with short sales. I think that stigma is going away a little bit, don't you?
I think it is. Most people still have a stigma. They know they're financially strapped, but they don't want their neighbors to know, typically. And what we see on a national basis is people are stopping paying their mortgages and they're paying their other debts first. In the past, people would put off paying their credit cards, their television, but they would always make that mortgage payment. But today they realize it's not in their best interest.
Right, exactly. What do you think people go through after they talk with you? Initially they're embarrassed, don't want the neighbors to know, don't know how do they tell their friends at church and stuff, but then when they talk to you, where do you think their mindset is after they start the process?
I think the biggest change I see in people is that there is hope, and this isn't going to last forever. Once we sit down and talk and I help them understand their rights and their responsibilities and what options they have, there's a light at the end of the tunnel. And people's attitude starts to change. Now, instead of having a situation, a problem, we've got a plan.
Right.
And we can execute on that plan and help them move on out of that situation.
Yeah, and I like to use the example, it's like your physical health. Right now, a short sale can be very detrimental to your health, and if you don't treat it properly and treat it immediately when the problem occurs, just like your physical health, it can create bigger problems and may lead to more harm than good. So if you're having struggles, encourage you to contact either myself or Tom and get that process. Start asking some questions, what your options are. The lenders, not that they don't want to help you, they're just not your best resource in the beginning. Now, Tom, let's talk about, I think there's a perception in the Omaha market that this doesn't exist here. What's your opinion of that?
I think there is too, but what we find is nationally 1 in 10 mortgages are currently behind in their payments. Now in Omaha is it 1 in 10? I don't think it's 1 in 10, but maybe it's 1 in 15. And if you think about that, when you do go to church this weekend, count the number of couples or people who may own properties in the room. If you're having difficulties, you're definitely not alone.
Well, and this is individuals that have lost their job, individuals that have had a decrease in income, a divorce, a medical hardship. Again, those same reasons. If this problem seems to be growing, don't you think? Absolutely.
We see it growing. Last year gave us a little bit of false sense of security because the federal government put a moratorium on foreclosures. So a lot of foreclosures that would have happened last year did not happen because of the moratorium. Typically, nationally, banks are taking 12 months from the time you miss your first payment until they foreclose on that property. So a lot of people have not been making payments for 2 or 3 months, and they're waiting for the guy to knock on the door and say, hey, get out of the house. It's just not happening.
Right.
So they just put their head in the sand and move forward.
Right.
And that's not the right way to go.
And there's just a confusion with the lenders right now. There's a burden of these distressed properties on the lenders, and they just don't know what to do with them, it appears.
The lenders, you have to remember, lenders are trying to mitigate their loss. They're a business. They're in business to make money. Right now they've got a problem. So they know they're going to lose money, but how can they lose the least amount of money? If they dump all these properties on the market at one time, they're going to drive down home prices. They lose more money. So it's really in their best interest to work with people who are in a short sale situation, but they don't know who they all are. They're busy dealing with these foreclosures.
Right.
That's where people like you and I come in. We know who to talk to at the bank. We can talk to the banks, make them aware of a specific situation, and start to work together.
Yeah, exactly. As we wrap up here, we want to make sure we're giving some good advice. But what are the options available to homeowners?
There's really several options. You can start making payments again. How would you do that? Well, you may be able to get a loan from friends or family. There are things called a deed in lieu of foreclosure, which essentially you take the keys to the home to the bank and you say, here's the keys, give me the deed, let me out of my debt. It's rare that banks do that.
Yeah, exactly.
Very rare. Sometimes, if it's a temporary situation, you can work out payment plans to make that up, or restate that loan, refinance that loan if you think it's a temporary situation. After that, short sale is probably your best option. If all of those things do not look like they're going to work in your situation, try to do a short sale. If you can show cause or a problem, we can start to work with the bank. A short sale will hurt your credit. It's going to bring your credit score down roughly 100 points.
Right.
You won't be able to get a FHA loan for 2, maybe 3 years, but it's a lot better than a foreclosure.
Yep. A foreclosure typically affects people 3 to 5 years, and that affects you in a lot of different ways: cars, home ownership, etc. A short sale is just like physical health is a pre-planned surgery versus an emergency surgery. Don't you agree?
Absolutely. Yeah. Foreclosure is going to ding your credit 200 points. That's hard to recover from, when currently you need a 680 credit score to get a good loan anyway.
Right, absolutely. So Well, and the other important, one last item is, instead of, some people have lost income, but they still have some retirement and stuff. That retirement's really untouchable through some of this process. And we're not here to be attorneys or accountants, but there is some, you don't want to let your credit, income, and asset health deteriorate to the point of no return.
Absolutely. Long term, in my opinion, and again, I'm not a financial expert, but cashing in 401k savings, IRA, Roth IRA savings for college,
Right.
to pay off this mortgage is usually not the best financial advice long term.
Right, yeah. And finally, there is a moratorium on when you do a short sale, you can have some potential to income of the debt that's written off. The federal government implemented through 2012 a moratorium on that typically applies to the first mortgage, and the second or third mortgage may still come back as income to you. That's lender specific. We encourage you to get an opinion from an accountant or an attorney when that situation happens to you, because there are solutions for that problem. Tom, I want to thank you for joining us today.
Thank you.
I want my clients, my friends, anybody watching this video to understand there are solutions out there. Tom Friehe with Zoom Marketing Associates, Terry Williams. Make that call before it gets too late. If you have a friend, a family member, or someone that you feel is impacted, let them know that there's an opportunity to work their way out of this. I appreciate it, and we'll see you in a couple weeks.